Hello there. In today's episode, we are going to have a look at a company that you've requested, Kęty. Kęty is one of the most popular companies among Polish dividend investors. They are on one of the longest dividend-paying streaks on Warsaw Stock Exchange. They've been growing them very nicely, almost always beat the expectations, and the board communicates very well. So, without further ado, let's get started. Kęty is a part of WIG20 index, which is an index of 20 biggest companies listed on Warsaw Stock Exchange by market cap. Currently with the year market cap above 7 billion zlotys. The company was started around 70 years ago and since 1996 have been listed on Warsaw Stock Exchange. The Kęty Group does not only operate on Polish market, in fact, export makes majority of sales. They have customers in more or less 60 countries around whole world while still being the biggest Polish supplier of aluminum profiles and components, as well as aluminum construction products and leader in the production of packaging materials. The most general description of what they do would be producing various aluminum products. The group consists of 24 companies and runs its operation in 3 business segments. Each has a leading company, and these are Kęty, Aluprof and Alupol packaging. Kęty handles the extruded product segment, which is production and sales of aluminum profiles and components for industries like construction, automotive, road and railway transport, electrical engineering and household goods. Aluprof handles the aluminum system segments, which is designing, production and sales of aluminum systems and sun protection systems, used again in construction sector. And Alupol packaging handles the flexible packaging segment, which is production of flexible packaging and BOPP polypropylene films used mainly in consumer staple sector like food, hygiene or pharma products. Aluprof, the aluminium system segments, makes for around half of group sales, while the other two make around a quarter of total sales each. Geographically wise, Poland makes 48% of sales, while EU without Poland makes for 41%, the rest of Europe 7% and other countries around 4%. Now let's try to understand better each of the mentioned segments. We'll start with the biggest one, Aluprof. As I mentioned, they design and produce aluminum systems, but what does it really mean? Actually, this is a generic name for a variety of products like windows and door elements, sliding systems, building facades, fire protection systems, internal walls, sun protection, garage doors, insect screens, door windows handles, and more. If we go to the Aluprof gallery, we can see images of buildings and facilities which were constructed with Aluprof materials. If you are European, then probably you can find something from your country. These include objects like airports and stations, high schools, hotel, galleries, schools, shopping centers, etc. Alupol Packaging produces aluminum packaging materials for food, household products, cosmetics, pet food, and so on. The brands that we can see here are all very popular in Poland and are ones that you really see in each supermarket here. I'm not a chemist, so I don't really understand the differences, but they've been heavily investing in their own patents and materials in order to make packaging as recyclable as possible. So it's nice that they try to keep up with all this ESG trend. And finally, Kęty, after which whole group takes its name. Their main focus is production of any kind of aluminum extruded elements like profiles, tubes, etc. They handle the whole process starting with the foundries, through extrusion and pressing, post-extrusion finishing and packaging with storage. What I really like about Kęty and what is unfortunately rather uncommon on still young Warsaw Stock Exchange is the focus on shareholders. As we can read here, they focus on cash flows that ensure attractive dividend, but we'll come back to it later. As you might have already noticed, the group website is very high quality comparing to previous companies that I analyzed. The board is known for good communication with shareholders. They publish forecasts regularly and have a good track of beating them each season. Every 5 years they publish a strategy for the following 5 years, and each time they analyze what they achieved, what they didn't, and try to draw some conclusion for future. There are various goals, from financials through profitability to ecological ones. If we have a look at the latest annual report for the 2022, we can see that already at this time they met the 2025 revenue, EBITDA and net profit goal, and are definitely on track with paid dividends and reducing debt. So, summing up business overview part, I think Kęty Group is a great business, well diversified geographically and product-wise, while still taking profits of specializing in aluminum processing. It's a company that has a terrific management, possibly one of the best boards on Warsaw Stock Exchange, and operates in an industry that I can definitely see prospering over a long period of time. It's quite easy to understand, though they still have significant moat because of long history and narrow specialization. They might be a bit cyclical though, as they rely on aluminum price. But, for me personally, it's one of my favorite Polish stocks. Now let's see numbers behind this business. Guru Focus gives Kęty an amazing 97 out of 100 score. Let's check why. The top line revenue has been growing very nicely over last years. If we switch to the net income, we can see that it basically followed the revenue. Free cash flow was a bit jumpy, but in general we can see that it was growing too. And what I really love to see here is that the return on invested capital ratio is increasing and currently sitting around a very good level of 25. However, there are two things that I dislike here. First one is stock-based compensation, which is effectively diluting value of the single share, but they stopped paying that in 2020. And the second is that the leverage that Kęty Group is using is in fact increasing, as they take on more and more debt compared to cash. Still, however, the debt is on less than 1 debt to EBITDA level, which shows us there is no real reason to worry, at least for now. Had you invested in Kęty 10 years ago, you would be enjoying now a total return of around 380%, and if you had invested in this company 20 years ago, you would enjoy a return of 850%, which is over 40% yearly. So, from the performance perspective, it looks really interesting. However, keep in mind that past performance does not reflect future results. If we average out the data that we have just looked at, we get 10 years revenue CAGR of 30.2%, and the earnings per share even higher, equal to 16.3%. Free cash flow per share grew annually over 20% and dividend on average grew 25.7%. It's that great double-digit growth, especially that juicy dividend that I really love about Kęty, and all of this in a rather conservatively managed industrial company. Let's focus on dividends for a second. As you can see, it was not growing each year, and this might discourage investors used to American dividend aristocrats. Unfortunately, Polish companies usually don't pay that much attention to keep it growing each year, as there's no such dividend culture as in USA. I'm under the impression that it's changing though, and more companies make an effort to keep the dividend growing annually. But for now, I really think that for a company like Kęty, it's worth loosening your strategy a bit and making an exception, as on average the dividends are growing, and in fact, in a fantastic pace. Current yield is sitting at the level of very high 8.51%. Over the last 10 years, as we already seen before, the dividend grew by over 25% annually, and over the last 5 years, over 15% annually. Had you bought Kęty 10 years ago, your current yield on cost would be an astronomical 83%. The payout ratio in Guru Focus is invalid, and according to my calculations, the last one should be around 89%. This is relatively high. Historically, they've been paying out between 80 to sometimes over 100% of the net income. This is one of negative things that we can say about Kęty, but it looks like they are a mature company that doesn't need to invest a lot to grow. So far, it looks that Kęty is an excellent business, but the question is if they will growing at the past pace in the future. I don't know that, but I think they have a strong position to continue the trend. The main risk that the management identified is a pressure on margins due to lower prices offered by companies from outside the European Union and also prices of the raw materials. As we can read here, a drop in demand is one of the worries. The second is the question of the origin of the raw materials. Until recently, Kęty alone purchased 50% of its aluminium from WSE, but in 2021 the share was already in the teens, and after the invasion of Ukraine it was zero. However, not everyone in Europe is guided by solidarity. Russian products and semi-finished products continue to flow to the continent also via Turkey. Also, one of the Kęty factories is placed in Ukraine. Let us recall that Borodyanka near Kyiv is the town most severely destroyed by the Russians in the first wave of the invasion. The Kęty factory was not demolished, but the office part was demolished and plundered by the Russian soldiers stationed there. So this is something that we definitely should keep in mind. And regarding the future plan, recently the CEO said they plan to update their 5-year strategy somewhere in the middle of 2024. As he said, they plan to push for better brand recognition in the whole Europe, not only in Poland. They also consider starting a new, fourth business segment and plan to make some acquisitions. So there are some risks, but for me, Kęty still looks like a great company. But is it a good time to buy Kęty? Well, their current price is in fact very close to all-time high, but it doesn't mean it's overpriced. Current price to earning ratio is actually lower than historically. If we go to Guru Focus DCF model based on dividends, the fair value is estimated to 1,470 zlotys, while current price sits around 734, which gives us a massive 50% margin of safety. Other valuation methods show very different fair values, but one from here I think is worth taking a look at is Guru Focus Value, and it tells us that current price is actually a bit above fair price. Still, however, I agree with Charlie Munger's view that it's better to buy a great company at a fair price than a decent company at a great price. And for me, Kęty is a great company. However, be informed that I own Kęty shares myself, so I might be biased. So, that's it for today. Let me know if you own Kęty or maybe if you got interested after watching my video. Please don't forget to like and subscribe, it helps me a lot. Thanks for watching. Remember that I am not a financial advisor nor an economist. The content is strictly educational and informational. You should do your own research and only you are responsible for your own financial choices.